All right, future pillars of wealth. Want to take a quick look at the rare earths sector and one potential company that has an interesting past, and if the past is any direction of the future, which there is no guarantee, obviously, this company could make people quite a bit of money. So this is Ditem Explorations Incorporated, and you'll find that the symbol is DIT. It trades on the Toronto Stock Exchange, but also Frankfurt Stock Exchange, and you'll actually find it on the pink sheets in the US. But to look at the history, you have to look at the actual Canadian one. So DIT.V, that's the symbol for the Canadian. And today it was down 11% at 4 cents a share. So this thing, I mean, this is a penny stock if you've ever seen one. Basically, they are up in Canada. They're based in Canada, and they're doing some explorations in Quebec. And they're waiting. They've just done some samples, and they're waiting to get the. I guess they do drill cores, and they're waiting to hear about what sort of rare earths are in those. And full disclosure, I have an interest in the company, a small interest, but for what it's worth, I'm a long-term holder and think this may have some value in the end, and not this sort of pump and dump type mentality. But so I just look up the chart here up on Yahoo Finance, and you can see we got down 4% today, or down 11% today, 4 cents. So it hasn't done much in the last, during this recession. You can see pre-recession it was, up in like the $2.50, $3 range. But it has a really interesting thing, and I can't find any information on this, but back in the early 2000s, it was up in the $45, and you can see this is really an anomaly. I mean, the chart, you can almost discredit this. I can't understand or haven't seen anything why it went up there, but you can still see in the late 90s, you're looking at $5 level. So we still have some possibilities there, and just to play the sort of lotto ticket mentality, if you want to throw away some money that you don't need in the short term, 4 cents. So let's just let's say we had $1,000 we didn't really care about, and we were going to buy that 25,000 shares. That sometimes the daily volume for that is average volume is 100,000 shares. So today it's showing there's only 6,000 shares. So obviously, if you go to buy this, it may take a few days. But anyways, 25,000 shares for your $1,000, and looking at the past chart, in the more recent history, we'll just go with like 275. So if it were to return to the pre-recession level, in the high twos, say 275, you're looking at that $1,000 is $68,750. That's a good return on your money. And of course, if you want to shoot the moon, and if we see whatever this anomaly was back in the early 2000s, 11 years ago or whatever, you are talking some craziness, and we'll just throw in $45. That's a huge number there. 1.1 mil. It's a roll of a dice, really, because it may never get over 5 cents. But there's a lot of interest in the rare earths, and it's a sector that back here no one even knew about this. And this company does gas explorations and some other stuff, so they weren't really a rare earth company back here probably. But if their new drill samples show some promise, they may inch their way up into the double digits. So even 10 cents you're looking at over double. But I wouldn't do this with money that you need in the short term and money that you could afford to lose, because it could never go anywhere. But it's one example of the sectors that are of promise and interest to me, and I'll be paying attention to those. And you never know, they may return to some of their former share price areas and make some good money on what you can buy it today. It is speculation, some would say, so take it with a grain of salt.